Definitely a big day for the markets and for, well, really for our row crops. We have a couple of big reports. We get a grain stocks report at 12 o'clock Eastern. So that's a look backwards at where we've been, and one that looks maybe forward is the prospective plantings report, and that's based upon farmer intentions. Let's get that right. It's based on farmer intentions. So a much different report than what we received from USDA back in February at their Ag Outlook seminar. So hopefully we've cleared the air on the difference in those reports and why they matter for today. Let's go to the corn market. We're up in trading and in the red, down a penny and a half, $4.41 a bushel. Soybeans have been up 1.6% here in 2025 and trading a penny and a half higher, 10.30 and a half. Soy meal contracts have been in the red here in 2025, and soy oil has gained almost 12% so far during the year, though the contracts are lower to start the day. Wheat market. Let's start with Chicago in July, 3 ticks higher, 543 and a half. For hard red, July contract penny higher, 566 and a half. And spring wheat trading penny higher, 629 and a half. Finally, over to the cotton market in New York, it's 38 lower at 69.71. Tommy Grisafi's with Nesvick Trading. All right, Tommy, obviously we have reports coming out today, but we've got a lot of things that are really working their way into the stew, if you will.
The stew, I don't know if it tastes good, Tony. Great analogy. Let's talk about outside markets real quick. We'll work our way down to the Dow and the S&P and the NASDAQ. Outside markets had a bad day on Friday, and they are continuing that trend. Dow Jones is down 400 right now, and that's going to leave a mark. Worse than that, that's the strong equity index. S&P down 80, NASDAQ down over 400. And that's, what do we have? Why is it doing it? Well, there's a lot of talk of tariffs and really putting these tariffs on the 1st or 2nd of April. A lot of going back and forth. But overall, there's just less money. The government is cutting back. If you watch what Elon's trying to do with Doge, they're going to spend less money so that we're not going as far into debt. We, from what I read or listened to this weekend, the government spends $6 trillion a year, and they only take in $4 trillion. So they're trying to not go backwards $2 trillion every year, and that's coming at the cost of possibly busting this bubble. The bright side of that, interest rates are going lower, and that's the Trump administration has talked very open about that. So what's that have to do with corn, wheat, and beans, and why aren't we talking about that on report day? Well, in the end, you could see some money flow out of equities and into grains. This doesn't necessarily have to be bearish. And the reason I say that is I look over at gold and traded gold last night. Gold traded up over $40 an ounce, new all-time highs, 3,160, maybe 70. It was moving pretty quick. Now gold's up 20. Who knows where it'll be down, where it'll be, insinuating it'll be down. Who knows where it'll be at the end of the day, because silver's down 50 cents. So outside markets are on fire. With that, as grain traders, we really need to focus at 11 o'clock on what these numbers are, both acres and stocks. And both of those numbers are big enough to move the market.
Yeah, I'm glad you kind of threw that out there. We're going through 6-month charts right now of our row crops and just giving us a little better idea of how we got where we are today. Looking again back 6 months ago to the trade, and the cotton market is a good example. Was trading 73 to 74, and we're well off of those, I hate to say highs from 6 months ago, but well off of those prices. We'll come back in a moment. We'll pick up our conversation. We'll move it over to the livestock markets as well. And if you're concerned about where the equities are going and, well, where the price of anything is going, we'll try to address that as well. Market Day Report continues in a moment. So box beef prices last week trading $7 to $10 higher. And again, we talked about this earlier with Brian Hoops. Cash trade 209 to 210 in the south, 213 to 214 in the north. We had a few in Iowa sell for as high as 222, but really not enough to pull that whole average higher. 235 to 245 on a dress basis. All right, we're open and trading livestock futures this morning. Live cattle in the red, down $1.30 on the April at 207.52, and June down $1.60, 203.25. Those are the only two contracts holding on to that two handle. Remember, I think on Thursday we settled with all 5 of those contracts for live cattle with two handles. In other words, $200 or more a hundredweight. 285.50 on the April feeder contract. That's $1.42 lower, 220 lower on the May at 283.07. And then to the hog market, hogs have been up 6.6% this year. April, dime higher, 86.80, while the deferreds are in lower territory. We'll throw class 3 milk in as well, and that's lower. Let's go back. Tommy Grisafi's with Nesvick Trading, and again, our focus seems to really be on those prospective plantings and grain stocks report, but we have plenty to trade in the livestock sector, don't we?
Yeah, livestock's going to be tested here by the outside markets, and typically when you talk about risk off, I was listening to your weekend show, and on Friday on XM Radio. And one of your analysts had said that you take risk off of things that people are really long of. And right now they're not that long of corn or other things. They're kind of neutral in grains. But the products funds are really long of. The cattle is just, it's just out there. And a couple bad days will make some people who weren't hedging want to hedge, people who needed to freshen up positions, freshen them up. And if we go lower today and lower the next few days, you'll start to wake up people to the idea of hedging. It's not popular when we're going straight up, but again, look at the markets that the funds are long and say if they were to have a liquidation of things, what would it be? You and I were talking off air, and they were teasing that. I mean, it's not a good guy to tease, but Warren Buffett had moved to cash 3 months ago, 6 months ago in the stock market. New highs, new highs, new highs. Why does Warren Buffett have all-time high cash? Well, now he looks smart. Now as the stock market approaches a 12, some of these stocks 15, 20% pullback, and different markets are moving. When you have all that cash and powder dry, that gives you the ability to take the other side, or you want to buy things when they're ugly. You want to buy dips, sell rips. And if you're long at the all-time highs here in cattle, I'm not sure what the rip's going to look like as the Dow Jones is breaking 500 points a day.
Yeah, great point there, Tommy. Tommy Grisafi's with Nesvick Trading. And as we wrap up, it makes me think of a market like cocoa.